is DIA, and you can see what, when I did this 110 up here, it bumped it up here and then knocked it down here. But we're in a pretty good spot here, and we're up $345 on that one too. Next one is First Solar. First Solar's kind of over here. We have it's not too bad, a minus 18 delta. If we look at the chart, it's in the process of doing a bit of a pullback too, as pretty much the whole market is. I'm not going to do anything to First Solar itself. When I make the adjustment, I'm not going to be making adjustments on the individual holdings, but I'm going to use one of the ETFs and probably SPY to make the adjustments on a portfolio basis, not on an individual stock basis, because ultimately it's a portfolio that matters, and if something's not behaving properly or the way that you want it to severely, then you can do something about it. But what I'm going to be doing is basically just taking a look at the individual positions and then making a decision what I'm going to do after that. And let's take a look at Google. This is my credit spread. It's still not up there. Google's been pulling back. When I entered, it was right around here, and we would have been up a little bit, but it's not behaving exactly the way that I would like to see it behave. And I can tell you, when I do this for November, it's not going to be on the same holdings that we have right now. I am thoroughly convinced that maybe one stock, and the rest are all going to be ETFs. It's so much easier with the ETFs, especially with the spreads on the strike prices are much closer. Most of them are $1, and I'm liking that a lot more than $10 spreads or $5 spreads. Alright, the other one is IBM, and remember I sold that put calendar on this, so it just left me with a single calendar, and it's over here, and right now it's down about 1950, and I do plan on closing this on Monday, and we'll take a look at what the effect will be on the portfolio. And that is everything right now. We'll go back to portfolio and wait it on the SPY as soon as it comes up here. Alright, now let me pull this up a little bit here, and let's take a look at what would happen if I closed out this calendar on IBM. Right now, just make sure none of these are in there. Those are going to be my adjustments, by the way, but they're not checked off, so they're not included in anything. So right now, I could close this and I could collect $3.37 in credit. What will this do? Okay, so right now we're at 732 for profit, and our max profit, let's just look up here, is 1931. So if I close this, max profit goes to like $19. So remember I said it's going to cost me $30, and there's my $30 right there if I should close this. So assuming that I have closed this, now how will I be doing adjustments? I will be doing adjustments basically just with single calendars. Now let's say that the market decides that it wants to move up on Monday and Tuesday, and by the time Tuesday or Wednesday rolls around, maybe it's up here and it's starting to fall off this expiration line here where the high profit is. I'm going to want to do something to bump this side of it up. So we're looking on SPY around 117, 116, 118, somewhere around there. So let's just turn on this particular trade for the 117, and you can see how the profit tent changes. Now my max is up to 1953. It's going to cost me another $1,200 to do this trade, because I'm going to do 3 calendars to bump this up. and if it continues up, then I just do another one. You can see that the cost basis, or I mean the break even, is starting to move out. So I'm at 118, another 3 calendars, and maybe at 119 I do some more. So now we're like another $2,100 into this, but the max profit is up to $22.59. Say the price moves up to 117 or 116, somewhere around there, and it tends to want to finish there. Well, that's great, and you can see that it doesn't do much to the current price right now. Now I'm saying that maybe that is on Wednesday, so we will move our date out to Wednesday, and if we are up there, then we're up $900, and you know, another $500, and we're going to be thinking about closing a lot of positions. If we go out to Friday the 8th, we're up at 117, we're up 1125, and then we wait and grab some of that weekend decay, and we come in here Monday of expiration week, and I'm definitely closing stuff now, definitely. Even if the market doesn't move that way, say we shut off all of our simulations, well, no, I don't want to shut off all the simulations. I do want to keep the IBM in there. So we're, say the price stays the same around here, we're up 1,300. I'm definitely seriously doing some trading and closing these positions and starting to think about next month's positions, which I probably will put on Wednesday, Thursday, and Friday of expiration week, at least the initial ones, and then start building that portfolio. So this has been a lesson for me. When I first started with as it was called, trading as a business, back when I first started with it, it was I was just playing with just double calendars and not even thinking about it from a portfolio perspective. And what was happening was I was just looking at them individually and whether I was making money on them or not as individual trades and not as a portfolio. And that's only doing half of the methodology that's taught in that course. So what I am doing this month for real in my live account is actually just looking at this from a portfolio perspective and not worrying so much about individual positions and just going ahead and doing adjustments to keep the portfolio where I need it. And that really is where the secret is in trading with this type of trading and this methodology, and that's where it's all at. So anyway, that's it for right now. I will keep you updated with posts. I don't know when I'm going to make another video. Maybe when I put on the positions for November expiration, maybe I'll make a video on that. So that's it for today. Thanks everybody for watching, and have a great and profitable week.